Hey there! Ever wondered whether long-term investing or short-term trading is better for you? Today, I'm breaking down the differences to help you decide. Let's dive in. First up, long-term investing. Think of it like planting a tree. You buy stocks, bonds, or mutual funds and hold on to them for years, even decades. The goal? To watch them grow over time thanks to compound interest. This strategy is great for building wealth steadily, and is less stressful since you're not constantly checking the market. Now let's talk short-term trading. This is more like gardening. You're buying and selling stocks or other assets within days, weeks, or months. The idea is to profit from short-term price fluctuations. It's exciting but can be risky and time-consuming. You need to stay updated with market trends and news. So, which one is better for you? It boils down to your personality and goals. If you're patient, have a long-term vision, and don't mind waiting, investing might be your jam. On the other hand, if you love the thrill of quick gains and can handle potential losses, trading could be more your style. Remember, you don't have to choose just one. Many people mix both strategies. They invest a portion of their money for the long haul and trade with a smaller amount. This way, you get the best of both worlds. Alright, quick recap. Long-term investing is like planting a tree, slow and steady growth. Short-term trading is more like gardening, active and hands-on. Both have their pros and cons. It's all about finding what suits you best. Thanks for watching. If you found this helpful, hit that like button and subscribe for more tips. Catch you next time.